What is up, investors, and welcome back to the Everything Crypto Show, where you can expect the latest and most important news moving the crypto markets, DeFi tutorials to earn some nice staking yield on your crypto, as well as deep dives on projects we see as having huge potential for the future. Now, as always, please remember this is not financial advice. These videos are for viewer education and entertainment purposes only, and I want this community to thrive, so please invest responsibly, and I love and appreciate you all. And now we're going to get right into today's video, which was not a planned video. As most of you know, if you follow me on Twitter or watched the previous video, we are on vacation right now, and this was not planned, but given the crazy day that we had yesterday in the markets, I did just want to hop on here and let you guys know what exactly happened and what's the plan moving forward. So I don't have any mic, I do not have this set up at all. I'm just gonna hop on here and just talk to you guys real quick about what exactly happened yesterday. So for starters, you can see that, the total crypto market cap here is sitting at 932 trillion, down from the all-time high of 3 trillion. We are down about 70%, so absolutely devastating. I did say in our Saturday weekly market update that I would not be surprised if we broke below that 1 trillion. I didn't think it would happen so soon, but there were definitely some things that happened that did, I think, accelerate the process. Now, if we also take a look at Bitcoin, you can see Bitcoin is well below that 30K level we were at just a couple of days ago, sitting at 22.5K. I did buy some more Bitcoin at this level. Ethereum here at 1221. I did also buy some Ethereum in the 1200s. And yeah, we're just going to continue our DCA strategy, but on these bigger panic attack freakouts, we do like to add a more substantial amount to our bags. We did also add to a couple of altcoins yesterday, like AVAX, which hit our key level here at $15, as well as Hbar, which did hit a nice level of support at about 6.5 cents. So those were some of the purchases that we did make. If you do want to keep up to date with all the moves we are making in real time, follow the Twitter and join the Telegram channel, as that is where I post most of that stuff. But now we're just going to get into what exactly happened yesterday, what caused this melt up. And essentially what happened was Celsius, one of the biggest crypto exchanges that does offer some tempting yield on your assets, they did actually halt all withdrawals, swaps, and trades yesterday on their platform. And obviously this caused a huge panic attack, as effectively if you have any crypto in Celsius, it is locked up. You cannot do anything with it. Celsius is holding people's crypto hostage, and a lot of people are wondering how exactly this could happen to a centralized exchange. And that's what we're going to talk about in this video. But if you guys have been on the channel for a while, you know that we always discuss the importance of getting a cold storage wallet. And I really hope that this whole event did kind of entice you to go ahead and do that, because as people always say, not your keys, not your crypto. And I think yesterday's market meltdown really did prove that. So the Celsius blow up explained. We got a big thread here that pretty much broke down exactly what happened. So I'm going to let you guys know. And for starters, this all started with Luna absolutely collapsing, and now we have Celsius in a $10 billion valuation exchange facing insolvency and potentially bankruptcy. So in the last few years, we have seen the rise of so-called centralized DeFi companies that custody/manage crypto on behalf of investors. And basically what they do is they take your money or your crypto, they promise you a fixed interest rate, and they put it on chain and use it in DeFi to earn a yield. While they advertise their services like that of a bank, it's really more like a hedge fund or asset manager. And of course, these strategies do have some risk and require supervision. So you can see here they're offering pretty much like up to 9.5% on all stable coins. And how exactly can they do this? Well, for starters, they originate their loans to institutions and individuals, and they keep whatever profits are left after running strategies on behalf of their customers. So if they advertise 5% on USDC deposits, they would then swap that USDC to make 20% on UST via Anchor Protocol, and then keep that 15% difference. And this obviously did them very well throughout 2021 and 2020, as they reached a valuation of 10 billion. The only issue here is that they essentially are not very responsible with how they manage their funds. So for starters, the Luna collapse, we have covered it before on the channel. It did completely shake the centralized and DeFi crypto industry and was quite possibly the biggest wealth destruction event in crypto, and Celsius was involved. So you guys know Luna promised 20% interest on their USD pegged stablecoins, making it a super popular product and advertised it as risk-free. But as Luna collapsed, many speculated about big institutional players losing their shirts on their holdings, and Celsius, who promised strong rates on stablecoins, was exposed to the collapse by holding potentially up to 500 million in UST. And here it was actually tweeted that blockchain analysis firm Nansen confirmed that Celsius was one of the 7 whales that did contribute to the UST depeg, completely going against what the CEO had initially said. And that was customer money that got lost, but they had a buffer, or at least they should have had a buffer. Now, part 2, we're going to talk about the Lido stake through Ethereum. So for ETH deposits, Celsius promised 6 to 8% interest, with a lot of it likely earned from staking rewards on the proof of stake Ethereum beacon chain, not bacon chain. We're not in Canada anymore. The biggest issue with this is that assets held on Ethereum beacon chain are completely locked and you cannot unstake for now. So crypto protocol Lido solved this problem by creating a liquid derivative asset called Lido staked ETH. And while the staked ETH has often traded at a 1-to-1 ratio, it is not pegged, meaning that it does not necessarily have to trade at a 1-to-1 peg. Celsius kind of counts on this liquid ETH holding its ratio at 1-to-1 because it needs to match liabilities. And in a bull market, this obviously worked out. But with the liquidity crisis and bear market that we are currently in, the liquid ETH to ETH ratio peg began to slide. And this leads us into the tweet from Celsius yesterday announcing they paused all withdrawals, swaps, and transfers between accounts. And you can pretty much attribute this to the wicked sell-off that we did see yesterday. I believe Celsius coin itself was down like 80% at one point, and deservingly so, to be honest, as essentially they are holding their users' funds hostage at this point. And that leads us into part 3, in which Celsius likely failed to isolate their risk. They might have taken USDC and held it in UST, or taken ETH and held it all in a liquid ETH. So when all of crypto drops and all users want their funds back, all Celsius users feel the pinch. It is the same pool of money. Celsius is facing a liquidity crisis, one in which prices that are spiraling downwards make it harder and harder to match liabilities, their deposits, with assets. So whatever they hold on the chain. There are about 10 billion in customer assets in Celsius, and about 1.5 bill are only accounted for in Celsius various wallets. So this means in terms of matching customer funds to liquid assets, there is a clear mismatch. They appear to only have about 15% of the 10 billion in customer assets amongst their various wallets. And this loss in confidence inspires more and more people to withdraw, which causes people to lose confidence, and it's effectively just a downward spiral from there. So if the money is not liquid, where exactly would this other 8.5 billion in assets be? And there's about a few places they could be. There's about 400 mil staked on the Ethereum beacon chain. There is another 400 mil leveraged in Maker protocol, which has been alarmingly close to liquidation. In fact, Celsius has effectively just continued topping up their position to avoid liquidation, but I don't know how much longer they can do that for. It is important to note that these positions are often hunted by institutional trading desks, and this is exactly why we don't recommend trading on margin unless you are incredibly experienced. And as long-term investors, we just don't practice trading on margin because institutions can see all of this margin trading activity, and what they do is they basically hunt and try to actively push prices down to get these big positions liquidated and then make money on the trade when the forced liquidation goes through. And the last thing we want to be doing is giving our money to these big hedge fund scumbags and institutional investors who actively hunt these margin calls to basically make more money for themselves. And as for the rest of the money, who knows where it is? Maybe it's lent out on centralized exchanges, maybe it's not. So how does Celsius solve the problem? It is possible they are totally solvent but just illiquid. If that's the case, they can try to negotiate with other institutions and whales to offload big illiquid positions for a discount. If their assets don't match their liabilities outright, then they are kind of screwed and are going to require one of 3 things: either an external funding, a loan, or an acquisition, which Nexo has actually already proposed to take over. So Nexo did actually propose on Twitter to buy out Celsius for all of their funds to really help them just stay afloat, or they'll go bankrupt, in which case all of their depositors are outright screwed. And as you can see here, I mean, I know we talked about this a couple of weeks ago. A lot of people were talking about a piece of text in a Coinbase article that basically said that if Coinbase was to go bankrupt, they would use their users' funds to pay off their debt. And this obviously concerned a lot of people. And here we see it again with Celsius, as they say, in the event that Celsius becomes bankrupt, enters liquidation, or is otherwise unable to repay its obligations, any eligible digital assets used in the earn service or as collateral under the borrow service may not be recoverable, and you may not have any legal remedies or rights in connection with Celsius's obligation to you other than your rights as a creditor of Celsius under any applicable laws. Just a pretty fancy way of saying if they go bankrupt, they're going to use your money to basically avoid bankruptcy or pay people back, and you can't do anything about it. So markets are obviously shaken by the news, and these big institutions are becoming forced sellers. And given that we are in this heightened state of fear right now, you can definitely expect governments to try and invite more regulation, more oversight, and more legal action and involvement from these institutions. So that is definitely something that I think you should all look out for, as it is exactly what they did with the UST and Luna event, and it's the same thing they are going to do here, taking advantage of the fear. However, what you can see is we're in a very unique situation where big institutions and centralized exchanges are the ones that have to sell, not retail investors, but these big institutions, these centralized exchanges that were over leveraged. Now they are the ones that need to be net sellers to cover their big margin calls. And I think this is a very unique opportunity for retail investors, for those of you who do have a long-term perspective, to take advantage of their liquidations for once instead of them doing it to us. And I do think that this is definitely, an advantageous time to be looking at cryptos that you do like. I'm not saying this is the bottom, because this could get a lot worse. Okay, Bitcoin went ahead and pretty much retested its 2018 high the same way that Ethereum went ahead and pretty much tested its 2018 high. So at this point, you guys should know that nothing in these markets is impossible, but as long as you are dollar cost averaging, sticking to your plan, and keeping your long-term conviction, I think you're going to be just fine. Not to mention the fact that if you've held through this week, through all of the FUD, through a 35% drawdown on Ethereum in 1 week, if you held through all of this, you are a champ and you're going to make it, I promise. So on that note, guys, I'm going to get back to my vacation. I do still have a bunch of videos lined up for you all while I am away, but I did just want to hop on here and let you guys know what happened. I hope you enjoyed the content. I hope you are all staying happy, safe, and healthy. Peace out for now.